This is Notepad. I'm your host Ibrahim Sani. Shortly, my colleague Hafiz Marzukhi will join us in this conversation, but we'll start with the big news of the day. Petronas's earnings have dropped 78% year on year, and this is the biggest drop that Petronas has seen ever. And this is largely because of the sluggish 2020 performance, and it has indeed brought about some concern from not just investors and the corporate watchers of the country, but the government of Malaysia itself. Excluding impairment, Petronas Group recorded a profit after tax of 10.5 billion ringgit for the year ended last year, a decrease of 78% compared to 48.8 billion ringgit in the previous year. So we're looking at 10 billion for 2020 versus 48 billion in 2019. And this is of course partially offset by lower group cost incurred. And of course this is largely as well a very stringent and cost-effective measure that Petronas has been undergoing for the past few years. The lower group revenue recorded at 178 billion compared to 240 billion the year before. Again, 178 for 2020, 240 for the year before. It was largely due to the effects of plummeting oil prices, which saw lower average realized prices for all products, along with demand disruption resulting in lower sales. And of course, across all the categories, including lower sales for processed gas, lower sales for petroleum products, as well as lower sales for LNG. According to Petronas, in response to the strong headwinds and reduced demand for lower oil prices, Petronas has responded by taking some measures, including an increased focus on cost compression, fiscal discipline, and higher productivity. And such efforts have positively cushioned such macroeconomic impact into the group's financial, with lower group cost incurred for the year. This is excluding some impairments that the group has been introducing for the past 2020 entire year. This is coming on 172 billion ringgit group cost compared to 197 billion ringgit in the previous financial year. So yes, they've earned less revenue, and yes, this has resulted in lower profit after tax. But one of the bigger reasons is because if you attack the center of the P&L, it's actually cushioned by lower cost as well. And when they cut 20 billion cost out of a possible 200 billion full cost of 2019, that means they have reduced the cost by about 10%, and that is critical for us to have that conversation moving forward. This of course has reduced OPEX and CAPEX by 12% and 21% respectively. Them reducing CAPEX might be a problem because Petronas, being a company that has been relatively aggressive in terms of growing their CAPEX, when they reduce their CAPEX, that also means that they are reducing their capacity to grow in the near term. Perhaps that is a strategy that we have to understand when we look at how Petronas is going to grow in the near term. The cost compression efforts, according to the group, says that they have implemented continued tight fiscal disciplines adopted and has resulted in the delivery of positive cash flows from operating activities of 40 billion, albeit a 55% lower than the 90 billion recorded in 2019. Nevertheless, according to the group, earnings before interest, tax, depreciation and amortization, or EBITDA, remain strong at 55 billion. Let's look at the outlook that Petronas has to offer right now. They say that the official line that Petronas is taking is they are cautiously optimistic with a challenging outlook, with modest recovery in demand and oil prices to continue to be impacted by COVID-19. They say that realizing growth pathway to secure new opportunities is going to be on the table and on the cards amidst the accelerated energy transition, especially in non-traditional areas as well as new areas. The outlook of the industry, according to Petronas, remains challenging, with modest recovery in demand and prices continue to be impacted by the COVID-19 pandemic. The emergence of fresh cases and repeated lockdowns to contain the pandemic will continue to pose a challenge to the industry. And let's add a little bit here, not just the oil and gas industry, not just the energy sector industry, and not just the GLC companies affected, but everyone affected, including the MNCs, which employ about 5% of the workforce, but more importantly, the SME sector, which employs about 90% or 95% even by some estimates of the workforce. Petronas remains cautiously optimistic and is looking to future-proof its portfolio by venturing into new energy spaces, including pursuing innovation and focused execution. Some updates on Petronas's COVID-19 response. They say that business continuity and value preservation will continue to go on for Petronas for this entire pandemic. Total contribution to COVID-19 efforts as well as initiatives, according to the group, stands at close to 44 million ringgit, which is, when you look at PAT, it's quite a pittance. 44 million against a PAT of against a PAT of about 20% down from the top end, and that's really something that we have to take note of, and whether we want to acknowledge that 44 million is a big number or a small number, we look at the efforts surrounding that 44 million that Petronas has actually pumped in. But of course, indirectly, Petronas has supported the government a lot, really a lot, by way of giving special dividends and special payments to the government, and therefore it is commendable that Petronas continues to support the government through indirect ways. But through direct measurement, it's only 44 million. And of course, Petronas enforces preventive health and safety measures to keep their employees in check. The group, according to them, says that towards COVID-19 efforts, prevention and also efforts, they've done a lot of work, including AS and Petronas, which contributed 20 million worth of medical equipment and supplies. They've also done some other stuff, including voluntary donation through COVID-19 special efforts and other stuff as well. Let's look at some of the operational highlights. Upstream, 17 projects achieved first hydrocarbon, 14 in Malaysia, 3 overseas. 13 projects achieved final investment decisions, they say, and of course 9 of them is in Malaysia, 4 of them overseas, 5 exploration discoveries. There's been some new discoveries in Indonesia as well, but perhaps that is captured for this year's financial results, not last year. And they say that they will continue to leverage on digital tools and platforms for end-to-end technology solutions. A lot of things can be discussed here when it comes to upstream, but one thing that we really need to note is that Petronas is committed towards net zero carbon emissions in the next 30 years. By 2050, they want to achieve net zero carbon emissions. This is not the first time we've heard Petronas say this. They've been saying this for quite a bit, and the idea here is that they continue to pledge that that is the target. Petronas is implementing projects for zero continuous venting and flaring of hydrocarbon and upstream assets, with an estimated total projected greenhouse gas reduction of approximately 2 million units and total gas recovery projections of about 33 million units. Despite, on top of these projects, upstream has achieved approximately 12.5% reduction in greenhouse gases emissions and of course 27% total gas recovery. Moving on to another sector, gas and new energy, they say that they have successfully weathered a challenging successfully weathered a challenging year troubled with market volatilities as a reliable provider of cleaner and renewable energy sources and solutions. They say that they have successfully delivered over 11,000 cargoes from the Petronas LNG complex in Bintulu, and 10 LNG cargoes have been uploaded to PF LNG 1, which is the world's first floating LNG production unit. There's a good documentary on this, you should check it out. It's really fascinating to actually take a look into the world's first floating LNG production unit. And of course, PF LNG 2 progressing towards first LNG cargo planned for the first quarter of this year, following the first drop of LNG arriving for February this year. Next, we look at downstream, a business that I kind of like actually because it touches retail. Petronas downstreams delivered strong overall petrochemical production volume of above 10 million metric tons, contributed by strong plant performance and reliability. And they say that Beyond Fuel PDB has continued to reinvent its retail offerings through the Makan Mesra initiative. And despite the challenging times, downstream business sustained its operational performance and accelerated strategic plans to generate business value. According to this, they say that there is a sharp decline in petroleum product prices, and Petronas Dagangan's overall sales volume dropped 23% compared to 2019. So that is something that we expected, a drop, but for it to drop just 23% is commendable. I actually personally, I would have assumed that they would have dropped a lot more, but we've seen how people are still moving about even when there are various levels of MCO being put in place. Those are the kind of ideas that we need to work on with. We'll go for a short break. When we come back, we'll have Hafiz Marzukhi joining us in this conversation. We'll be right back after these messages. Welcome back. As promised, joining me is Hafiz Marzukhi from the studio. So Hafiz, we did a readout on the Petronas announcement. One thing that worries me is the drop of 78%. If we pull up this particular table that shows the federal government finance, Hafiz, as you can see on the screen right now, the revenue expected for this year is 236 billion ringgit. Actually 237 billion ringgit, which is up 4.2% based on projected 2020. And much of this revenue comes from two areas, which is revenue from tax collection and revenue from Petronas. And as we've seen yesterday in my show, we spoke about corporate Malaysia posting very, very low earnings for 2020. So they might not be able to pay income tax the way we have seen them pay in the years before. So we can expect lower than projected revenue coming in from taxation paid by the corporates in Malaysia. Itu satu. The second is income from Petronas, because as we have discussed this briefly just now, Petronas profit after tax have also dropped 78% year on year from 2019 to 2020. And when we talk about Petronas, we always talk about Petronas being a big paymaster to the government, be it through corporate tax or through special dividends that is being paid to the government. And because Petronas has registered 78% lower PAT, we can also not assume, we can also project that Petronas's payments to the government will also be lower for this year. And when you talk about these things, Hafiz, let's just assume that the government is going to find it tough to find that 237 billion ringgit revenue for this year. As a regular Malaysian, Hafiz, does this concern you? What do you think the government is going to do next? What shall we prognosticate when it comes to the government's finances for this year?
I mean, the way I look at it, Ibrahim, is the start of a vicious cycle, right? When we look at how the corporate earnings for the year 2020, it just looks like it's a very gloomy outlook. And me as a regular Malaysian looking at this with no stakes in terms of I don't have shares in any of the companies, is a grim outlook, because it basically means when these companies are not earning as much as they used to. I mean, Petronas is some might even arguably say is a cash cow, and when their earnings dip more than 75%, 78% in fact, it's really worrying, because it means that the government has less funds to use with, and this means that the government have to start looking at other ways, including probably reviewing a taxation system. And of course, when later, I believe we're also going to see it have a slight impact on the income tax. So this is all worrying at a time when it is important for the government to have money to kickstart the economy, Ibrahim.
Yeah, let's look at the other graph that I have for you, Hafiz. This talks about the reliance of commodity versus non-commodity income for the country. It says here that from the 1970s, commodities have been a major chunk of our economy. More than 80% of our economy was talking about, or well, total exports, pardon me, was coming from commodities. And as you can see in 2019, the data has flipped in such a way where more than 80% is non-commodities. And this is when we have to really put a big crosshair on what sectors that can be used as a total export for this, right? And the way I look at it is E&E, energy and electric and electronics. We're looking at exporting other source of services, including digital economy as an export, if you think about it, like cloud or whatever. And we have to start really aggressively talk about non-reliance of commodity businesses like Petronas. Based on this, I think we are poised to not only address the need for us to think about non-commodity exports, services, things that we are already good at, like electronics and electrics, and this is the challenge that we have to ask ourselves. You're right, Petronas has been a cash cow for the country, but as a cash cow, it's supposed to provide cash. And I don't know whether we can use the same term for the years moving forward. This year maybe we can still use it, but in the years moving forward, I don't think that's possible any longer. And as we've seen how COVID-19 has been a very strong promoter of digital adoption across all industries and across all sectors, and we've seen how people push forward, no matter how difficult it is, to adopt for digital adoption. I think this is the only time for us to take on this opportunity to move towards digitizing our economy. Very recently, the MDEC has announced that GDP for Malaysia, 20% can be classified as coming in from the digital economy. This is a statement coming in from Surina Shukri, the CEO of MDEC. I don't know whether this is going to be a thing that we need to be enhancing even further, but with the launch of My Digital very recently, last week actually, perhaps that is an impetus for us to move forward on this. What do you think?
I think that's the name of the game right now, right, Ibrahim? When we talk about facing a slow economy, basically with MCO practically turning everyone to migrate their businesses online, the digitization factor or the digitalization is very important, and we hope that it can somehow fill in the void. No matter how big it can fill, it remains to be seen. I'm no economic expert or business expert to be projecting how big of a void it will be able to fill. But I think moving forward from now, when we talk about, of course, we are far from a post-COVID situation right here, although the vaccines just arrived, but we're still far off from what we can term as a post-COVID economy. But it is important to start diversifying and start looking in the future as soon as possible in order to mitigate the very damaging impact that COVID has on our economy and the companies.
Let's look at the next chart that we have right now. This chart talks about the kind of macroeconomic outlook when it comes to issues regarding commodities. As you can see, crude oil, natural gas, oil palm, rubber, all of them have seen some sort of change over the past year on year, and this is not big of a change, you know. I mean, it's going to be the same kind of outlook that we've seen in 2020 versus 2021. For oil palm, it's also the same thing. For rubber, we might see a decrease from year on year. So the move towards the high dependencies on this industry and imports or output is still not there yet. The urgency is not felt yet. Perhaps the urgency can only be felt in the years to come, but perhaps also the ability for us to address the global effects or the macroeconomic effects that is impending on the Malaysian commodity sector has to be talked about. We've seen the first thing that when our Prime Minister visited Indonesia, that's the first trip overseas Tan Sri Muhyiddin has made overseas. The first thing that he did was talk about crude palm oil and talk about the business of palm oil. You know, I would have expected both these leaders talk about services, talk about digitization, talk about other things, not just commodities. Commodities is a 1970s conversation, and I know that both countries are the bigger exporters of palm oil or CPO palm oil collectively, more than 80% or 85%. That's not thinking forward. The way I would argue is that we have to think about how to liberalize the ASEAN economy, how to capitalize on the 700 million population that we have, how to energize perhaps free movement of labor amongst ASEAN members. You know, it's not that easy, you know, Hafiz, if you want to pick up a job in Vietnam and some Laotian who wants to work in Malaysia, it's not that easy. The way we benchmark ourselves, we have to look at how free movement of labor is done in EU, for instance. You know, an Italian can easily find a job in Spain, an Italian can easily find a job in England. Oh, sorry, I take that back. Italian could find a job in France, since the UK is no longer in EU.
They can do that before Brexit, yeah.
They could do that before Brexit. But that's the idea that we have to move forward. The internationalization of Malaysia and our neighbors can be done if we adopt or embrace the whole notion of ASEAN in the first place. Anyway, those are the kind of ideas that we have. It's just a general grim conversation that you and me are having, but perhaps this grim conversation, so-called, quote-unquote, can be peppered with a lot more positivity in the near term. That is much of the things that we want to say for this evening. If you've missed any part of this interview or this conversation, just head on to Astro AWANI, look for Notepad over there. But for now, thanks very much for watching and goodbye.